Robinhood stock finished Friday's trading session down by a modest $1.50, closing at around $129.91. That's a decline of just over 1% on the day, and while it's not dramatic compared to some of the wild swings we've seen recently, it's still notable because it follows a week of softer sentiment across much of the growth and fintech space. The stock has been on an impressive run over the past month, up more than 10% since mid-September and nearly 50% higher compared to where it traded earlier in the quarter. So naturally, after a strong climb like that, a bit of a pullback can look more like a pause for breath rather than a reason for panic. Still, investors are watching closely to see whether Friday's dip signals something deeper, or whether it's just the market cooling off after a very heated rally. So let's look at what's actually happening with Robinhood stock, what may have driven Friday's weakness, and where the next potential catalysts could come from as we head into a new trading week. First off, in terms of market context, Friday's trading session was rough across the board. Renewed trade tensions between the United States and China weighed on investor sentiment, pushing most major indices lower. Fintech and high-growth names like Robinhood tend to feel that pain more acutely because they're often priced on future earnings potential, and anything that clouds the macro picture tends to pull risk appetite down quickly. This wasn't a Robinhood-specific sell-off so much as it was a broad rotation out of risk-sensitive assets. But that said, the company's recent surge has made it more vulnerable to quick profit-taking. After rising more than 20% in a single week earlier this month and gaining steady momentum through October, it's only natural for some short-term traders to cash in their gains. That profit-taking likely amplified Friday's downside move. However, the aftermarket told a slightly different story. Robinhood stock did bounce modestly, recovering around 70 cents after hours. That kind of small rebound suggests that some investors saw the dip as an opportunity to re-enter or add to positions at a slightly cheaper level. In other words, there's still demand sitting underneath the surface, a sign that sentiment hasn't flipped bearish just yet. Now beyond the day-to-day price action, there are still several developments shaping Robinhood's trajectory that are worth paying attention to. The biggest story this week revolves around the company's continued expansion beyond its traditional trading routes. Robinhood executives have hinted that they're open to deals or acquisitions to grow their prediction markets business, a new area that could open fresh revenue streams in the years ahead. Prediction markets allow users to trade contracts based on real-world events, everything from elections and sports to economic indicators. This is a big move because it pushes Robinhood further into the territory of decentralized finance and social speculation, two sectors with strong growth potential if managed responsibly. That expansion, however, also carries regulatory risk. Prediction markets are heavily scrutinized for their overlap with gambling and derivatives trading, and how the U.S. Securities and Exchange Commission ultimately classifies these products could determine how scalable that business actually becomes. Still, the move aligns with Robinhood's broader goal of building a one-stop-shop financial ecosystem, not just for stocks, but for all types of market participation. Then there's the ongoing benefit of S&P 500 inclusion. The stock's addition to the index continues to have ripple effects. Funds that track the S&P have to hold Robinhood shares, and that means constant passive demand that helps underpin the price. Even weeks after the official inclusion, the effects are still being felt, particularly as index tracking funds rebalance their portfolios. At the same time, Robinhood has been strengthening its core platform with features designed to keep users engaged, from improved portfolio analytics to expanded retirement options and even early signals of an international rollout of its banking and investing products. These moves may not make huge headlines, but they add stability and depth to the company's long-term story. Still, it's important to be realistic about where things stand now. Robinhood's valuation has risen significantly in a short period, and that can make the stock vulnerable to pullbacks when there's even a hint of macro uncertainty. Some analysts are beginning to voice that caution. According to recent data, the average analyst price target sits closer to the low hundreds range, suggesting some on Wall Street think the stock may have gotten ahead of itself in the short term. But remember, analysts often lag the market, and Robinhood's transformation over the past 12 months has been substantial. The company is now earning more revenue from net interest income than ever before, benefiting from its growing cash balances and high user engagement. It has expanded its reach beyond equities into crypto, cash management, options, and now prediction markets. That diversification gives it resilience it didn't have just a year or two ago. So when you look at Friday's 1% dip, the big question isn't really what went wrong, it's what happens next. There are a few key things investors should be watching as we head into the new week. First, the support zone around the $125 to $130 range will be critical. If the stock holds that level and finds buyers early next week, it could confirm that this pullback was simply a cooling-off period. On the other hand, if that range gives way and volume spikes on the downside, we could see a retest of the mid-$120s before new support forms. Second, volume and sentiment will be telling. If Friday's sell-off came on light volume, it's usually less concerning. That's often just short-term traders stepping aside. But if we start to see larger volume selling next week, it could indicate that institutional holders are trimming exposure, which would be more meaningful. Third, keep an eye on macro news, particularly anything tied to inflation, trade talks, or the Fed's next moves. Even though Robinhood's fundamentals are improving, its stock still trades like a high beta name. That means when markets swing, Hood tends to swing harder. Fourth, any updates around the company's prediction market push or further hints of international expansion could reignite bullish sentiment. Robinhood is slowly positioning itself as a global platform, not just a US brokerage app, and that shift could create new narratives for long-term investors. And finally, the crypto market connection shouldn't be overlooked. Historically, Robinhood trading volumes and crypto activity have been strongly correlated. If Bitcoin and Ethereum continue to stabilize or rise, that could give another boost to Robinhood's transaction-based revenues heading into the next quarter. Now, when you step back from the short-term volatility, the longer-term story remains quite compelling. Robinhood has executed one of the more impressive turnarounds in recent fintech history. From being dismissed as a pandemic-era trading fad, it's re-emerged as a serious financial player, diversified across banking, brokerage, and fintech innovation. The company's profitability profile has improved dramatically, it's grown its cash position, and it continues to attract new users, particularly younger investors who see Robinhood as the default starting point for entering financial markets. That generational advantage could pay dividends for decades to come. Still, there are hurdles. Competition remains fierce. Legacy players like Charles Schwab and Fidelity are pushing harder into digital products, while up-and-coming apps are racing to replicate Robinhood's model with lower costs and fresh incentives. Regulation also remains an ever-present risk, especially as the company explores prediction markets and crypto-linked products. And then, of course, there's the valuation question. Can the company grow fast enough to justify its market cap if interest rates stay higher for longer or user growth slows? These are valid questions, but they don't necessarily weaken the bullish argument. They just mean that Robinhood, like most maturing tech companies, has entered a new phase, where execution matters more than hype. So, how should investors think about Friday's move and the road ahead? In the short term, it looks like a healthy consolidation within a broader uptrend. The market is digesting strong recent gains, and macro concerns are giving traders an excuse to take profits. But so long as Robinhood holds its technical support levels and continues delivering steady growth in new business lines, the overall bullish narrative remains intact. In the medium term, the next few weeks could see some choppy price action as investors recalibrate expectations. We might see the stock oscillate between $125 and $135 before the next major move higher. Watch for volume surges, news catalysts, and analyst updates. Those will be the early signals that the next leg is forming. And in the long term, the thesis still looks strong. Robinhood is transitioning from being a high-growth trading app to a full-fledged financial ecosystem, with multiple revenue pillars, an expanding global reach, and a younger demographic base that keeps engagement high. That's a compelling setup, even if short-term volatility continues. So as the weekend unfolds and markets prepare to reopen Monday, the big question isn't whether Robinhood can survive another dip, it's whether this period of consolidation will set the stage for the next breakout. Friday's move may look disappointing on paper, but viewed in context, it's part of the natural rhythm of a stock that's been running hot. Every rally needs a breather, and sometimes the healthiest thing for a long-term trend is a little bit of short-term pain. If the fundamentals stay firm and the company continues executing on its roadmap, prediction markets, global expansion, and deeper integration of its ecosystem, then Friday's drop could end up being remembered as just another stepping stone on a much bigger climb. Because in markets like this, the difference between panic and opportunity often comes down to perspective. And right now, Robinhood still looks like a company in motion, evolving, expanding, and preparing for whatever comes next.